here. Let me just show you something we're getting into. It's one of the reasons why I've been really quiet lately. You might notice this. I've got this now on my store, quantlabs.shop. You can get that. I love quant. We're gonna have another hat coming and really expanding in that business. So let's get to learning about stocks and live trading. Here we go. All right. So what I want to talk about here, Windows, love it, hate it. I don't know. Anyways, here are the stocks. So these are give me's for those looking for stocks. If you're not, I'm on Seeking Alpha now, and I'm 260 so far followers, and it's growing all the time. So to verify all this stuff, you want to read all my reports. These are not related to what I put on Seeking Alpha, and a lot of the times that will be the case. So as you know, I run ETF scans, and these are the only being November 16th here at the bottom right there. You'll know these are the only stocks performing, the only sectors that are consistently performing and at best performing. So I'm going to show you some of the stocks. We're now live setting it up all for live trading on MotoWave. So here are the stocks that I ran today, and these are the allocations recommended if you were to take beyond a higher lot size. So right now, the best ones are Mineral. I think that's Big Ram, ATO, top two, and then IBE, BHB, FMG, and all that. So I'm going to go over that with you and show you what I am seeing. Now, again, I'm using Interactive Brokers, so I have the TWS running. Okay, there we go. All right, so I have TWS running in the background, and I'm not going to obviously reveal my account ID for Interactive Brokers. I'm not that dumb. So these are the ones that I've got open. Okay, so if you've been following me for a while, I have a custom strategy right here, MACD reversing ATR trailing stop strategy. So that's written in Java, combined with the two studies of that. And I've tweaked them, I think, a little bit more to optimize them, and I can still do that. I'll get into what's going to happen after Black Friday. All right, so right now we've got one, two, three, four, five stocks open, ready to trade, and going at it. Okay, so right now, in terms of time frames, you could go 1 hour. The problem is you're going to get a lot of false positives, and this is what I'm talking about. These here, where they signal there's an entry and then it just doesn't work out. You could lose money here, but you're definitely going to lose money on the commission, like the dollar. I mean, unless you're really tight, dollar per trade per round trip. So you want to minimize that. Now, obviously, you don't have control over that unless you don't want to trade the stock. But this one, VNOM, let me open up a new chart here so I can show it to you. Let me show you the 1 day. So again, these are the best performing in the sectors. Mining is a big one. These charts take forever. Um, so you can see there's been some nice growth here since October. It's kind of gone flat. So I might be problem with all this is you could be when you catch something, you could be on the tail end of it. So you kind of got to make a choice here because usually I'm at the middle of the month. So um yeah, I mean it's not been a great month anyways for November. The way I'm doing, I should say. So here it's been fairly flat, but here's the one winner so far. Um if it will come up, MNRL. Let's see if this will come up on a daily. Um, Let me do, yeah, 3 day. This shouldn't be take too long. There we go. So this is Mineral 3 day move. Let me switch it over to 1 day, 1 week. Ooh, okay. That's not what I wanted to show, but this was working really nice. Oh well. Um, And let me show you some other ones here. So, okay, let's look at US Steel. So as I said, it's been fairly challenged. So here you can see US Steel is doing pretty good on a 6 hour chart. The 1 hour, that's looking okay too. What you're trying to do here is capture trade orders, but at the same time capture the ride up, obviously, and be able to minimize your commissions. So the more commissions you pay, the less profits. Pretty obvious. So in order to reduce that, you got to reduce the amount of trading. So if you're generating more signals, and as I said, they become those false positives, you're gonna get eaten alive by commissions. So when I apply that strategy I was talking about, you can see here we've made a little bit of money here, and then this is a, 1 hour 1 hour chart. So we've gone from, always look here on the bottom left. So we're looking right here on that entry, right about here. That's at 2163, and the close is at 2457. So that's over what time frame we looking at? So November 10th to November 15th. So that's a 5 day trade, and that's about a 10% move, is it? So again, we've gone from let me see here on that price right there, 21 to around $24. So when you look at that, that is pretty good over 5 days, 15% trade in um in 5 days. So the question now is, we've captured that, and that's an hourly chart. So the question becomes, is it going to continue to move up? Am I capturing the tail end of this? So if I look at the 6 hour, I don't think so. It could continue to leg up. There's a variety of ways to look at this, but you're definitely on the, like, if this is going to continue, a good way to look at that is always look at a 5 minute or even a 1 minute chart, more data, so it takes more time to load up. This computer's got 16 gig, so it's not like short on memory, and these are the only programs that I'm running. So I'm not really running anything crazy. But going back, is this moving up? See all here, all those negative, false positives. Again, you don't want that. The 1 minute, not recommended. 1 hour, not recommended. Now, here's the thing. In terms of time frame, what I'm learning a ton of, like a ton on Seeking Alpha, and I'm learning it via comments, and I'm also learning it via um, policies of Seeking Alpha when it comes to their policies. So one thing that they will not allow is, if I have a table of recommended uh, analysts over a variety of different time frames, the lowest they'll go is daily. They will not allow intraday uh, time frames and have those as recommendations in articles. So you can only go down to daily, weekly. So they're only really more about investing and not day trading. So that's number one. You learn about that. I've always known that you want to make money, you don't want to day trade. You want to invest. Okay. So from what I'm seeing personally, outside of Seeking Alpha, a 6 hour time frame is pretty good. But on the other hand, you miss out on opportunities, as you can see here. Whereas if I go to 2 hour, I've got two trades here that did make money, and I could still capture if this does turn around, which I think it will. So I could just say, okay, put it on a 2 hour chart, and we're just waiting for that to turn around, which it looks like it will. So I'll capture an entry there, and woohoo. Okay, cool. So that's with US Steel. Okay, Mineral. I can't remember the name of this company. Um, but this one, there's a lot of gaps here, and that's another challenge. The thing is, the good thing about gaps in stocks versus crypto, it doesn't affect the price a whole lot compared to crypto. Gaps do affect price, especially if you're in a low trading coin or low volume coin. You could get whipsawed horrendously, in your bot or your whatever automation will not capture that fast enough. So hopefully you apply a stop order on the order when you make entry on the order. And then on the other hand, now you just signal back to the broker or exchange for crypto. Now, we know, I'm telling you, if you're on crypto right now, you do not want to be on any exchange because they're cheating on you. Look at the latest on FTX. Do I need to say any more? Cryptos.com's the same and Coinbase is the same. The only exchange I trust is Kraken. All right. So I don't worry about so much on Kraken. And the volume on Kraken's really picked up a lot because of these fiascos and people are kind of picking up on it. And then you hear about proof of reserve. They did that years ago. So it's not a trend for them. Going back to this in stock, my apologies for all you stock traders. There's still a lot of money to be made in crypto, no matter what you read. So Hero Mineral, you can see there's quite a few gaps here. So they don't really affect price as much. So the price does not collapse where you don't get a lot of whipsaw. That's a good thing about stock. And there's some really good ones here. As you can see, you know, you've got a price here from $19 all the way up to 24. That's a big move, okay? And I think this stock will continue to move up. And there's always a nice story to it because steel production, I don't know. So let's check out another one. We have CMC here. So we're going from 38 to $47. Again, fantastic. And that's on a 2 hour time frame. So you can see here, we're just waiting for that upswing to come, and it's just a matter of time. Entry will take place, and voila, we're live trading on that. ATO, and again, you're already picking up. I'm not really knowing about much about the company. If you read my Seeking Alpha articles, I'm going to be honest with you. When you look at a company in terms of news, what they're doing, the industry, how the economy may or the macroeconomic or macro may impact it does have a major impact. That's already built in the price, right? You'll be able to see that on the price action on the most recent, and I'm using all kinds of techniques now, including fundamental. Fundamental is very important and you can't get that with Forex. You may can, but it's coming from the company itself. That's what I like about stock. So the company will have to stick their neck out if they want to get continued investment, and they have to put guidance out, forward-looking guidance. And I rely on that quite a bit. And then I use the technical analysis as a way to time the trade. I just got a question about that. I've got numerous comments. Is technical analysis useful? Um, Generally, technical analysis to predict on a stock is useless. Once you identify a stock in which you're interested in, yes, technical analysis is perfect because you're able to use technical analysis um, for timing trades. See here, I know what stocks I want. You can already see out of all of them, they've been moving quite nicely. And then now I can just allow the automation, the strategies I've built out to be able to say, yes, go out and trade them. And I just sit back and let it happen, just making sure that I'm trading the right stocks um, when they are going in the direction that I want. So far, as I said, with my analysis on the ETFs, they've been brilliant. I like to focus only on the ETF sectors that are going to be top, top, top returns. Usually, within the first couple of days at the beginning of each month, you will get certain sectors that will give you already within 3 trading days on that first of the month. Within those 3 trading days of the first of the month, you're usually going to already reach double-digit returns. So you start focusing on those, and usually, most of the time, they will retain a 2 digit, double digit return for that month. So that's how I'm doing it. This seems to be working. And the best one, the only one right now that's doing that is mining and metals. And I think there is an occasional uh, energy in there as well. So that's how I'm doing it. So once you identify the stocks that you want, and there's a lot of stocks to go after. So for instance, in my case, I used to just do the ETFs. The ETFs are very expensive on the management fee. So if you trade like this with automation on ETF, you're not only paying a commission, you're also paying the management fee to get in and out. So why do that? So instead, where I do that is I just say, okay, screw it. I'm going to go after the holdings of the ETF, and I'm able to pick out which stocks out of that batch of holdings for that particular ETF. And I can get like right now for metals, there's probably 6 or 7 very nice performing ETFs, and a lot of them will have equity or stocks in them of holdings. And I go through each and every one of those, and I have other scripts that will analyze the top performers, and which probably will give you a better guidance. So, for instance, here as I showed you, um, this one, this is a list of stocks that I can look at. Like I fed it at the beginning of this process with the automation, the scripting that I've got with the Python. I give it out of the process as you just described. I might have 30 stocks. So out of those 30 stocks, some of them may be duds, meaning they don't have a lot of volume. They may not have a lot of real good price action. And then I have a portfolio optimizer. What it will do is it'll analyze those 30 stocks and then spit back the allocation weightings of particular stocks that it would recommend based upon liquidity or volume and price direction or price action. This is what it ended up here is these are stocks and these would be the weightings. So if I had $100,000 to deploy today, I would deploy 16% of that 100,000 to go to IBE, 22% to go to MNRL, and 21% going to ATO. So that's how I do that. And that's really important because it enables me to be able to identify those particular stocks and what weightings I want. In this case, as a lesson, if you've got a tiny, tiny account, which I've got, what you can do is I'm using MotoWave. It's easily the number one trading platform I'm using. I've got this running on Linux. I've got this running on Windows. I've had instances of running on Mac. So that's a nice thing about MotoWave. Will run on anything. Do your due diligence on the platform. It's an excellent, excellent platform. Anyways, coming back to this, one thing I will tell you is when you come under configure for order presets here, what you can do is you can set your default quantity on the order number of shares you want to buy for a particular stocks. Right now, one of my strategies, because my account's very small, a lot of these stocks I just listed here are probably under $100, maybe preferably under $50. Anyway, so you come back into these individual stocks and then you open them up like I've done here in MotoWave, and I'm able to gauge which stocks I want based upon, as I said, do they have gaps and so on. So I'm able to use these stocks, open up the strategy that I've got here. This is usually universally, this is the best strategy that I found, and set of indicators combined in this automated strategy. I fully coded it up myself in Java, and I just apply that one strategy to everything that I trade, um, be it in crypto, be it in forex, or be it in stock. So that's a good thing. So let me talk about that. All right. So here comes the marketing machine. So we got Black Friday here in 2022 coming up. So I'm on Seek and Alpha. I'm at 260 people. I'm continuing to meet a target of having 750 followers on Seek and Alpha. Once you achieve that, I'm hoping to get in the marketplace. Once you get in the marketplace, then that changes game for me in terms of revenue for myself. So what that means is I'm then able to go and say, let's say I have those followers or other people that want to be able to set up what I've got. There's a couple of things we can do. MotoWave is not, I mean, it's not a cheap, well, it's an affordable platform. Fine. But what the real experience is the strategies. Okay. Because here, when you out of box get, let's say, out of box studies, indicators, you're going to get over 300 of them. So you don't know where to go. You don't know what works, what doesn't work. But what I will tell you to save yourself that headache is maybe no more than 10 are going to have lag in them because a lot of these studies indicators have lag. If you have lag, um, they're not the best strategies. So you're going to want to work on studies that don't have lag, okay, or minimal lag. So I've got a list of those available, and then on top of combining those small subset of studies or indicators, experimenting and what universally works for both entry and exit. Everyone seems to think that strategy is that one strategy. No, for every trade you go in, you have an entry, that's one strategy. So there's an entry strategy. Then you have to have the ability to watch the position or order, and then have another strategy to do the exit. Got me? So that's another strategy. So there's really two strategies in one strategy. So what you're really doing is you're going to eventually combine these studies, indicators into one strategy. Now, in the motor wave world, we have the indicator we call a study, and then you have that fine, and then you want to execute and place trades. You have to turn those into a strategy. Out of box for MotoWave, you don't get very many strategies, maybe 30. So a lot of those strategies do not include really what works, maybe the RSI, and that's about it. So you have to rely on custom strategies. So that's what I've done. I've got four. The best one I found was the MACD entry reversal bonus. Like that's a really good entry strategy. Then you got to focus on the exit. So usually people will want an ATR as the exit, but that's not enough because now you have to have the ability to do a trailing stop ATR. So that's what I have on the exit. So that's the best combination I'm finding. So that strategy works pretty good. Okay. It eliminates noise. It eliminates, well, it won't eliminate, but it will minimize the false positives. And the false positives are these right here. I've said that. So with that in mind, uh, in the world of uh, of strategy building in MotoWave, there's got to be code. Now I could put out a uh, piece of code that's what they call obfuscated without the source code, but I try to be transparent for people. But now I'm at a point now where I'm able to get credibility being on Seeking Alpha and build upon that. So this is not for a YouTube crowd. This is not for a Facebook social media crowd. This is for actual real traders on Seeking Alpha that are probably paying money as real traders and paying, reason a bit of money on Seeking Alpha for the research of all the different contributors out there. That's who this what I'm about to tell you is for. And if you're a traditional follower of mine, that's fine too. So you got Black Friday coming up, whenever it is, by that weekend when it ends, Cyber Monday, this is the only and last offer I'll give. If you want access to everything that I've got, I'm okay with it. But it's gonna be $9.97. $9.97 for till the end of that uh that time period. Black Friday, Cyber Monday. After that, everything's now going to go up to $29.97. So basically $3,000 I'll be charging because I'm building out the profile on Seeking Alpha among other different areas. Because I'm not cheap anymore. I've put in 10 plus years of this. As I said, it took me quite a bit of research to get where I'm at today. We are live trading, and it's going to be minimum $30,000 to get into what I do. Okay, per year. Okay. Plus, as I said, with that strategy, among others, I can give the source code. So a lot of these people may not find that useful, which is fine, but the programming end of it's going to be where the value's at if you are into algorithmic trading. Because the nice thing here is once you get the stocks you want, You apply the strategy you want, the automation, and you just let it trade in the background. You don't have to do anything more because now you have direction, okay, as I'm showing you here on just these stocks right now. So these right now are ready to trade and I'm good to go live. So that will be additional my track record that I will have. I had this moron challenge me, call me a scammer and all that. And I just said, you know what, dude, if that's the case, show me a trader online that has their own track record. So this was a really dumb retail forex trader using MetaTrader. One of them, right? So he's got some dude who says he's trading and blah 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 blah. Okay, so he showed me the track record. His last update was over a year ago, and that's the best he could give me. I've got another guy. I think I showed in another video what he does. He's worked with I can't remember his name, Doug something or other, whoop de doo, doing mining stocks. Like I went through a bunch of stocks in mining last night, and a lot of them are very low volume. That's why they're not here. They're legit, or they're too volatile. So that world is not worth trading in. But using that same role model, he does have a track record. He generates it himself. It's not verified by any service. On top of, he's charging $3,000 a year just for penny stock mining companies. That's it. That's all you're getting. So I'm figuring, why don't I charge the same amount, give the source code to the strategy, plus you get, hey, this is where I'm at, on top of the like very live um, engagement I'm offering. So that's what I'm doing now. So for 3,000 comparative to that, with eventually a track record that's verified in real time because it's going to be synchronized both to my interactive account as well as my Kraken account, um, and that hopefully goes profitable. The 3,000 that I'm speaking of will continue to move up. I've got guys that are educating. I know a guy in Europe. He's charging over $70,000 to set up a complete system and offers trading, and it's 70,000 US dollars. Okay, so 3,000, 6,000 is not very much money. But as I said, if I'm focusing on the Seeking Alpha crowd who are going to pay, and if you read the same spiel from that stock mining penny stock guy, he does have a legitimate point why he's able to charge that kind of money because the hedge funds are paying thousands of dollars per month to get access and research to stuff that works, but it has to be verified. So I'm like one step away from getting into that crowd, which in the world of Seeking Alpha is called the pro level. So um, you know, they exist, and I know how to get them. Just a matter of getting to them and getting the access. So this the 3,000 in a nutshell is cheap when you getting a fully top notch trading platform like Motorwave on top of source code, on top, and we do everything: stocks, crypto. I would do forex, but it's not very exciting. But stocks is now in November 2022 is turning around, and I think it's going to come back with a vengeance, big time. So there's why it's going to be very expensive for lots of retail traders. But Black Friday is going to be the last approach if you want to get in on this. That's going to be then by that Black Friday, Cyber Monday, by that time. So that's what I'm pushing out. After that, it's going to be minimum 3K for a year. I will also follow in the same mining strategies that the guys got. For those that can't afford it, fine. I will offer 1,000 per quarter, but it'll be even out to the 3,000 per year. Plus, as I said, I'm hoping to get onto the the marketplace of Seeking Alpha. So that might be the other affordable way to go for those want to see what I do is legit. Plus, um, it's on Seek and Alpha. Thing is, with that kind of product and service monthly, I'm not just stuck to stocks. It's payable to me as a membership that you're part of on the lower level, which means I can do other types of reports as well. I can put in there my crypto. I can also put in my ETF, what I like, and right now there is money to be made in the world of forex. That's fine too. People ask, why am I not getting into forex? Sorry, into futures and options. To be truthful, right now, you're very limited on what you can trade there. The margin requirements too high. It's too much of an obstacle to trade. If you get the trade wrong, and the same in the options world. Plus, the only real benefit you get with options and futures is the tax break. So for now, I do want to move into options and futures. Don't get me wrong, but right now I like ETFs because there's no fees at all um, if you're a passive investor in the world of ETFs. So that's the better way, and you can still get into the commodities and all that. Plus, with ETF, you can get into things like real estate, da 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 da. If and let me speak about real estate, all those other types of like SPACs and stuff. If my ETF scans say these are hot places to be, like in terms of top, I'll trade them. Right now, I'm not seeing REITs, I'm not seeing SPACs, so I'm not going to touch those. But if I want to get in the equivalent of the real estate game, I can definitely get in on it. Uh, so there's that. I mean, I could spiel about all kinds of stuff based upon what I've seen on Seek and Alpha. Anyways, so let me wrap up on the Black Friday thing. So that's where I'm going with that. Okay. And one thing you'll know is I'm not doing a lot of content anymore on Facebook and Instagram and YouTube and whatever else. To me, it's a complete waste of my time. If I'm not going to get compensated for it, I'm not going to do it. And as a result, let me just go here full screen. Come on. So what I'm saying is I'm branching out into new businesses like on that at quantlabs.shop. And the thing is, when it comes to YouTube, horrible audience, horrible. These are people that want stuff for free. Okay, continue watching other channels where you lose money. I always knew that FTX was a scam. I knew that what's that other one? The other garbage one, Hex isn't yet, but they're being looked at and investigated by the feds. Um, but people will still continue to pump that garbage out. And then there's the audience that will think that's the best thing. So you get places like Bitcoin, and I love Bitcoin, and that's definitely not a scam. But my point is, if you want to be dumb enough and self entitled enough to be on these platforms, don't let me stop you. Okay. You can insult me till the cows come home. I don't care. Okay. I'm not gonna make money off you. I had an argument with a dude. He was an idiot. Okay. And a complete waste of my time. My focus now is on paying audiences, and that's right now Seek an Alpha. Okay. I'm not gonna make money through the Instagram crowd or the YouTube crowd or the whatever else crowd online. But the audiences there have radically changed. 10 years ago, you could do very well on YouTube, as an example. Okay. There's less competition. They weren't censoring like they have. And over time, over 10 years ago, there became this self entitlement thing. And because people want instant results now, and they want the $1 million results now. And people are on there pumping that garbage out, and look what happens. Like that's the SBF guy, um, and people are in alert. Cry me a river. Because if people are that gullible and they lose money like that, sorry, I'm not. I don't play that game. So these kind of audiences are no longer what I'm after. As I said, I'm on Seeking Alpha for a reason because it's a very valuable crowd. It's a legitimate trading audience that are trading on Seeking Alpha. Got me? So with that in mind, um, this is where I'm at now. Okay, doing the same thing, taking the best of the best that I've done over the last 10 years and catering to that audience. Now, if you're on YouTube looking for answers and you're willing to put in the work, by all means, continue following along. But if you're sitting on the fence and been sitting on the fence or having your finger up your butt and not pulling a trigger to do live trading, and I'm just as guilty there too, you're not going to get anywhere. Especially as we go into 2023, we got a recession coming on that I think will, and Stas Gray Dalian, he says a lot of people are going to get wiped out, and I think they will. Because what's going to happen is jobs are no longer aplenty, people are getting laid off. Companies are now saying, why am I going through this? Let's start automating a lot of positions. Let's start getting rid of the redundancy. So it's going to be very competitive to find work, trading time for money. That no long that will work up to a point, but when you got 9, 10% a month or annually in inflation, you're screwed. And not just that, you've got this is gonna be a long video, I could tell. You've got also the currencies right now that you earn money in wherever you live, be it euro, the eurozone, where you get the euro, pound, the British pound, Canadian dollar, U.S. dollar, anything, even in Asia. Look at China or Japan yen. How many interventions they put in to try to weaken their uh, to strengthen their currency. So currency, fiat currency, that what you make today is going to be more expensive when you step outside of your country or when the country needs to import products. So what I'm saying is your fiat currency that you have is making you weaker. So if you're relying on fiat currency wherever you are, is going down. Down it's going. And you look at it. The only thing that's strengthening is the US dollar. Um so you gotta have alternative multiple streams of income to get through this. Um, in my case, as a retail trader, you've got crypto, stock trading, ETF, and these are all multiple different sources of income. Then people will go on about real estate. Who's going to be able to afford a mortgage at 6, 7%, right? And inflation, and they ain't getting any raises on their job, let alone if they can hold a job, let alone if they can stay in their career. I could go on about the global sickness and the medicine that comes with it, people being mandated out because of that. So, in order to be smart, you have to have multiple sources of income, right? And having these different sources at what I just talked about, like forex, well, crypto, stock, all that stuff, each one's a source of income and diversified. Now, in terms of things like real estate, you don't need to go out and buy real estate. If you listen to these idiots like Grant Cardone, say, well, you're gonna tie up your money in a building and hoping you have a tenant that will pay it. What happens if there's a new pandemic that comes along, right? And then the government says, no, these tenants don't need to pay rent anymore, but you're still responsible for your mortgage. What are you gonna do? You're very vulnerable in the world of real estate. So if you want, or you get a call, my toilet ain't working at 3 in the morning, come fix it. Um, so you really want to deal with that in the real estate game? I'll tell you what you can do. The world of ETFs, you have the real estate income trusts that you can play off of, short, long, whatever you want. You can do that. Everyone goes on about gold and silver and precious metal. Look at the prices of frickin' gold. Let me go back to uh good old motorway. So let me pull up one of the I'll do actually both. So we could look at gold, and I'll pull up silver here as well. So this might take forever to load up. But at the end of the day, gold is flat. It's stable. It's good to hold. But people don't talk about, and this is what I'm learning with Seeking Alpha. This is the negative side of Seeking Alpha. There's a lot of people out there in their retirement relying on dividend income. Okay, I think a lot of companies will get rid of dividend income, and they don't need to have it. So I was just about to do an article on, I can't remember. I think it was Boeing. Was it Boeing that was going to cut and eliminate their dividend income? And that's just due to because Boeing's coming back. It's coming back in a big way as a stock, so they don't need the dividend anymore. So if you have people in retirement trying to live off of a dividend, a good one, which I did an article on. This is where I first learned about this. Was a company called Realty Income that does commercial um, REITs. Like they go in and set up a commercial property, income to tenants, the retail tenants, and then set up a retail income trust around that. That stock took a huge hit this year. And then the only way they were surviving is based upon dividend income. So you get all these people buying the stock in order to get the dividend income. So their main asset that they're holding is the stock. And the stock is now getting hit 25% or even 50%. I don't remember what it was, but it was in solid decline. But all I heard was on the comments was, well, I've got my dividend, my realty, or sorry, my dividend pays 7%. And you offset that on the loss in the stock of 25%, but you're gaining um, your income from the dividend, you're still netting your loss. Blows my mind. So I don't think this is a smart way to retire. If it's a healthy company, which more of the time, the higher dividend, the companies that issue dividend are not performing. That's why they issue the dividend. Example of that is going into the future. I just did an article on Seeking Alpha on Exxon, best performing stock out there, and then started to plateau. But when you look at the article, and then you look at all the time, look at the estimates, look at forward guidance, you'll start to see that their dividend is starting to ramp up in the year 2024, 2025, and it moves up. So and what's happening is Exxon knows that oil is not going to be the cool thing to drill anymore because where's their revenue? So the market cap size Exxon shrinks. So the only way they can continue to thrive as a company, somewhat thrive, is by issuing dividend. And that's what's happening with these companies is that they will decline, go into some, and then the only way they survive is by issuing dividend. And then along comes the retired class trying to make uh, income out of that. You can't survive off that. If the company decides to just cut off a dividend, you're screwed. Or what happens if they get taken over? Or what happens if they go bankrupt? Right? What happens? It's not a reliable source of income. Okay. So there's that. Plus, when you look at, let's say, real estate is another thing that they'll sit on as a source of income when they retire. That's not a reliable source as well. As I said, with REITs, um, what happens if another pandemic comes along? What happens if there's an economic collapse, which is more reality than ever? Or what happens if the U.S. dollar collapses? Yesterday was the first time I actually heard on Bloomberg, uh, Bloomberg that they're saying that the U.S. may default. Okay, that's a big deal. So knowing that, okay, here's gold. So let's talk precious metals because it's another misconception. So if you look at the monthly view, because everyone's going about silver and gold as the economy turns, I do know we will go into recession. Um, Gold is okay to have in a portfolio when things get wonky. Okay, and it's stable. It has been stable for a while now. But here's a fact. I think it was in 2012. Let me pull up a browser here. So there's a meme out there. Uh, let's see. Bum, bum. Let me go to finance here. Yahoo Finance. Here's a great example. Okay, so here's Barrick. This is Barrick right here. So this is the largest gold producer in the world. I know that because I just wrote an article about them. So they're at 1590, down 2/3 of a percent. When you look at the overall full screen, okay, for gold, this should be much higher. You look at the year to date, that's gold. That's the largest producer of gold. It's garbage. Look, it's gone from 25 now down to $15. So how can you tell me that gold is a great investment, especially for this year when it's already declined? All right. So let's look at the maths. It's done okay. It's gone from 1760 to here. Here's where I want to take you. So it did peak back to $26, but look at the time. Look at that time line right there. 1996 was the last time it hit these highs. So if you're going and holding gold all this time over, let's say the last 10, 15, 16 years, uh, you have to look at something that I never hear the term opportunity cost. Okay. Opportunity cost is huge when it comes to gold. Okay. So here again, this is what I want to show you. So here is gold. It peaked here at 157. So this is one of the largest ETFs in gold. So that's in January 2012. So it dipped and it came back to 180. And that is at July 1st, 2020. And it's kind of not gone anywhere since then. So my point is, if you're holding gold, okay, if you're holding gold, okay, and you bought gold here, right? You would have that's remember, this is 2012. You would have bought into gold here, and then here you would have made back your cash 8 years later. So is gold a wise investment? No. Sorry, but that's the reality. Gold is okay if you want to hold to protect your portfolio right now. It's probably a good time to do it. In case there's a collapse and you have physical gold, I get it. I can't argue it. But they've been saying that for how long now, right? Will gold collapse or will everything collapse around it? Possibly. Um, but again, waiting for that day is opportunity cost, right? So let's take a look at silver here. Same thing. Look at this. If you invested in silver back in 2011 there, $45, where's gold now or where's silver now? Not even half. So you lost 50% of your money holding that. Okay, so again, if you're retired right now, you should be worrying. All right, so precious metals is not where you want to be. Now, I could go on about crypto. Let's be real. Okay? Let's be real. It's down 75%. I'm not here to bash crypto. I love crypto. I love everything about crypto. I love the innovation of crypto, but it's not a safe place to put your bet the farm on as well. So what do? So, as I said here, the only way to beat this and preserve what you've built up is by doing exactly what I'm showing right here. You have to follow the sectors that are making money. Okay. So right now, as I've shown you already in this video, the place to be um is in metals and mining. Okay. And you have to watch those sectors on what's performing. So basically what you need to do is here's a great example. So as I said, we've got Exxon, which has done very well. So let's check it out. So if you're a tree hugger and you're an environmentalist, you probably don't like this video already because all I'm saying is put money into mining and oil production. let me tell you something when it comes to ESG and sustainability. I am not an environmentalist. I do believe climate change exists, but if you want to get political and you get into the lefty kind of companies or leftist, they're the ones that have the worst ESG ratings. Okay. They either are average or below. So all the companies you go on about, I've got to have an analysis come out on a company like Disney. Okay. They're the most woke company out there and they have at best an average sustainability. That's environmental. The companies that have outperforming ratings are these companies here, oil, as well as mining. Okay, the companies I've shown you or put on my Seeking Alpha usually have a really good rating. A one that I just posted today, FCX, which is Freeport McNamara, is another really good one. Let me pull up a browser here. So let me show you Exxon. So this is a good comparison, actually. So we've got gold, Barrick. Okay, so if I use Exxon, okay, so where's Exxon? Okay, there we go. So you can see here, you have to ask yourself the typical classic commodity battle is do I hold oil or um do I hold do I hold something like gold? Okay. So you could easily flip between the two. You could see here gold's not doing anything. Okay. But here since let's say 2003, Exxon would have performed much better. Much better. So you're going from the price here of what's the price? $19 all the way up to 75, $73. So if you're watching these sectors and the reason I'm bringing up oil here is because you can see it's declined. But if you knew oil was going to give you good return, that's how you're able to retain your uh your portfolio, but you don't need to worry about gold. Okay. So you could easily trade, I don't know, an oil ETF, an energy ETF, international or US only. That's up to you. Or you can just stay flat and be in gold, right? So you want performance. And this has got nothing to do with dividend income. This has got nothing to do with realty income. Okay. So there's oil. So if you know right now, so that's max. Okay. So let me pull it out to monthly. So if you know these sort of things, so in the case of let's see, oil, where's oil? All right. So with let me just pull this and go XOM. Okay. So if you know oil is producing really good returns as an Exxon, and you can ask any reader on Seeking Alpha, you can see already that Exxon's kind of not doing too hot. Okay, it's topping out right here. Same with the monthly too. So you can see it's topping out, but so it's just come to that end. So if you're watching that sort of thing, you're going to want to look for the next best performer. And that brings us to where we're at today in November, mining. Mining's doing very well. Okay. So here is oil, Exxon, look at that. 40 to $112 in November 1st, 2020. So ask yourself, why would you put money into gold? Why would you rely on a subpar dividend player when you get this kind of performance where you could have made 300% in 2 years? You ain't getting that with crypto neither. So, but you got to know about this stuff, right? Here's currently what's going on with um, FCX or Freeport McNamara. Really good run up here. So timing's everything between here, June 20, So the price was there at 713, and no, this can't be right. So the price there at 767 all the way to $50. Yeah. So you would have gone up, oh, 700, sorry, 700% in a mining company. And this is a large mining company based out of Phoenix, Arizona in the US. So again, why are you holding real estate income or relying on gold? Why are you relying on crypto? Why are you relying on what's the other one? Uh, Dividend income, right? So here I'm just showing you got one stock, a mining company that is producing 7-time return in 2 years. Unreal. And that's legitimate. So you can see what's going on here. It's hit its reversal back in September, and it's now starting to take off. So here, because of what I do, I'm able to see where the highest performing stocks are, or sectors, I should say. And then through that, as I said earlier, go through the ETFs, go through the holdings, and then you run a set of processes to see which are the best performing out of that lot. Freeport McNamara is one of them. So again, let me just remind myself here. I'm going to go to 6 hour, and this is how I'm able to apply this strategy. Simple as this. Once you get set up, so it's now going to 6 hour. So right there, you can see Exxon's doing pretty good, but it's 112. Do I want to invest in this? I think so. So let me apply that strategy. Boom, just like that. And I'm going to go down to 6 hour, let's say. See if this is fully loaded. This shouldn't take this long, but I don't know. It does work. So here, with these ETFs, I could trade them, but they're not giving the same level of performance. I mean, look at that. That is a monthly chart on silver. People get excited because silver is going up. It's just, to me, it's a joke. Um, so we want daily. Look, they get excited by that move. I get excited by these moves. So there's a 1 month chart, FCX. That's still coming up. Okay, so I want a 6 hour chart there. So let me go back to talking what I was saying. So this is how you do it to retain wealth. Okay. And as you can tell with what I'm doing, based upon what I'm knowing, what I'm seeing, and I'm showing you live, really star performers in the stock world, um, like real estate. Uh, I'll show you that other one. It's called O. This is the realty income. O. Let's see here. Yeah, O realty income. I'll show you that one when it loads up. This is a 16 gig system. Shouldn't be that slow. Anyways, it's really Interactive Brokers. Anyways, so what I'm saying here is, if you know how to time what's the top performers and time it, know to when they get in, know to when they get out. But the best way to do it is with automation, as I'm showing you here, and you get a really good platform as well, um, like MotiveWave. Because here, what I'm doing is I'm providing uh, hey, these are the star performers. Here's the way to trade it and time it properly and automate the trading for you. So you get that with what I'm providing. Um, so again, this is from an investment point of view. And then we haven't even talked about crypto itself. Just see if it's all wow. Wow, wow, wow. I think it's this video's doing a number. Anyways, you know what I'm gonna do? I've done enough blabbing as it is. Okay, I can do this. So, okay, let me show you the Realty Income. So this one's kind of a joke to me. This is apparently the highest paying dividend income in real estate, in commercial real estate. And let me go full screen here. Here's the performance. Okay. You can see here between August at $74, been banged down to $55, and it's already done pretty good. Will it continue? Maybe. And it's also paying a pretty high uh, income. So maybe this isn't such a bad company looking at it, but at the time it was not the best. But people were going on and on about it. But maybe you could do well with it. I'm actually thinking of doing a new article on this and pile on to the positive of it. But at the time, as I said, it was not the best. But you're going from 57 to $64. That's a 10% return. That's not bad. Plus getting a dividend. That is not bad. But again, with what I'm showing you here with these strategies. See right here. Okay, so I've got Exxon open, $112. And one thing I always want to make sure, as one of the lessons in the world, is make sure that your default quantity on each order you take is whatever shares you want and it's within your account. So this is a pricier stock. It's $112. So I'll activate that because what's going to happen is I'm waiting for the strategy. I know I'm bouncing around here on topic, but what I just said is if you know that this is going to move and it's going to take an entry, this strategy right here is you can tell that that entry is about to cross right here. Now, the question is, will it continue to move up? Uh, this last one was a month ago. I personally think the tail end of oil or at least energy is done. I mean, there's really no consistent profit here. So is this worth taking a chance on? I'm on the tail end of this. So looking at it, I'm going to say I could stick it out, take a risk, and I might do that. Let's see FCX. So that here you could see with FCX. So this is a 6-hour chart here. October 17th, all the way up to $37. Do I want to try this one? So if I know a stock's moving, in this case, FCX, which is Freeport McNamara, all I have to do is just do this. You can play around with all the parameters. Okay. You can set your MACD parameters. Um, you know, you can set your all kinds of things. I just keep the default, right? And in this case, I just go create and activate. That's it. And now it's ready to trade. So what will happen most likely is we've had our last trade here, November. Um, so that right here, I think right here was the last entry, November 4th. Okay, so today's the 16th. So what it's looking for, it looks like it's going to have an exit, right? And then I just leave it open if I want to continue. If that trend continues, I just let it run in the background, ready to automatically trade. I could be sitting on a beach drinking Bahama Mamas and let this trade in the background. And this looks like it should continue to go up because I'm seeing those in my ETF scans. It's still performing pretty good. So that's all I need to do to activate that strategy in that trade. And I've got the same thing set up with each and every one that I've listed here, the mineral X, which is US Steel, CMC, so on. Okay. So I'm now actively ready to trade FCX based upon the strategy here and let it run in the background. And people don't need to wonder when should I take an entry? Well, this will do it for you because you just apply the strategy and you're ready to go. That's the nice thing. Okay, let's take a look at gold here. Um, so this is a daily chart. Would I take this trade? Let's see how it's doing on the hourly. It's looking pretty good actually, 152 to 164. So it really depends on what goes on in the markets and the news that comes out of the markets. So GLD and SLV may be a good time to trade. It's hard to say, right? I could have these just running in the background, as I said. So right here, this one's fairly flat, the silver. Um, Gold is moving pretty good. See the daily. Yeah, it's moving pretty good. So I might just say, screw it. I'm gonna trade gold and just do this. Boom, activate. That's it. And now whenever these markers go in the direction I want, I can trade them. So in this case, it's on a daily 6 hour to get more potential entries, better timed entries. We're just gonna pare it down to 6 hour, and I can do that on any of these charts. Um, so here with Exxon, I don't know. I'm not sure if I'll like. I like stocks with trend. Um, looking through this, um, yeah. See, there is some trend there with um, Exxon, but it hasn't. It's the trend has stopped here at the end of October, and the question is, will it continue to move up? Here is what I'm looking for. This just really good looking uptrends and continued uptrends. And I can just move in between the different time periods and let it automatically trade because it's all synced into my IB account already. Gold here, I don't know. Silver, this doesn't excite me because you can see that decline there. So I have to free up some memory here as well. So again, Um, if I'm tight on memory on the computer, I just close some of these lackluster performers. Again, I'm going to do this with Exxon as well. That I think that opportunity is come and gone, but it may come back. And the only way to know that is by my scanning the ETFs. So I haven't seen energy in any of my scans for the last 2 weeks since November 1st. So energy, I think that has come and gone. Right now, the producer, as I said, are the mining and metals, and that's what I'm going to focus on. So, um, yeah, so I'm just closing these up to free up some memory. So, all in all, people ask, well, how do I get around this? Uh, this is it. You have to time your trades, um, know what sectors to be in that are trending, that are moving up. Right now, that's the only way to defeat it, but you got to know, and you can't guess. You can't do it by human unless you build what I've built. But if you know about a sector that's moving, that's great. You know, you can do well in it, but it's going to be maybe a month, maybe 2 months at the most. And the example I just gave you that is no longer that opportunity is energy, right? So now it's metal and mining, and that's where I'm at. That's where I'm deploying my capital and let the automation do all the trading for me, knowing that this is a top performing sector. Plus, you got to know what to trade within the sector. And there are some stocks that do well. There are stocks here that are only on purpose less than $100. There are other stocks that are probably better performing that are 150, $200 that I not put in, and they can be better performers, but they're too big for my portfolio. If you got hundreds of thousands of dollars, one that would do well is I think it's TCL T, and this one I saw as part of my scan. Not sure if this will come up. Let's see here. No. I just learned about this a month ago. Okay, go to finance here or Yahoo Finance. I knew this was gonna be a long video. I haven't done videos in a while, so I don't mind doing these long, drawn out videos. Right here, this one, TPL. This one, TPL. Okay, so this company, or it's really a trust. It's a trust um, set up by Texas where lots of universities have bought into land, major amount, like huge amounts of land, and a lot of that land have oil exploration and drilling, right? So because there's so much land and that's owned by this trust, T Trans-Pacific Land, um, they get royalties on the oil exploration and drilling, and those go into the college funds of the state of Texas to keep uh, the education in Texas very low. This is brilliant. So you could make money on this. I mean, year to date, look at that. Year to date. I mean, you're going from, let's say, what was that? Oh, about $1,000, and now it's at $2,600. So as I said, if you have a big enough account, you could trade this, and it will go up. And that's all related around pretty well oil drilling, oil exploration within Texas. And I've discovered that through my discovery process, if you want to call it, of some of the ETFs with this holding. And it was the number one holding. What's TPL? So I do the research and I'm going, why is it $2,600 when it was $600 not very long ago, whenever it was? And look at that in a really challenged market, and boom, it's gone up uh, pretty well. It's more than gone up 2.6 times since uh, the big since February of this year. That's amazing. So again, you want to build wealth? Here's one of those legitimately traded opportunities that I discovered. Now, I could tell you this publicly, but if you're my $3,000 a year person, I would let them know because a lot of people don't know about this. So this is just another example of an oil play. Now, will this continue? Probably. Um, and there's lots of these out there like this, but this is probably the most lucrative out there. Another one is actually Berkshire. Let me show you this one. Now, I would write an article about it, but it's because of its BRK hyphen B. I'm having problems loading it into my software. So this one's done not bad, 265 to 308. But it's had a nice little swing there. But there's companies like that or stock like that or equity like that. So you could see how you can retain wealth, but you got to know about it. Okay. And you can't learn this through the social medias of uh, of YouTube and the what I call the frat boys that are pushing their crypto scams and their forex scams and penny stock scams and all that garbage. Because I'm not interested in playing in that space, and I'm not interested in attracting those kind of people into my sphere. I want serious traders. Now, there's a lot of people that want to learn how they can do it. I'm telling you through this video on how to do it. And going back to the recession on the uncertainty of it, if you're not able to see these kind of legitimate, regulated trading opportunities, you're going to get smoked. You're going to get smoked bad. And I don't like saying that. You'll end up in the soup kitchens. And I'm hearing there's lots of them. And you could lose your career because the automation, the bots, they're coming for you. And you're going to have to rely on your own techniques or you'll be forced into it and needing to figure out this stuff. So again, going back to the Black Friday thing, at the end of it, I'm not looking back because I don't need to. I don't have anything to prove. I don't have to show proof of anything. Um, yeah. So again, uh, let's. I'm just thinking some stuff here because I don't want to say bye. All right. So today, if you go to my Seeking Alpha account, let's see here. I'm able to see which ones are being published. Now, I put up a bunch today. So, okay. So these are the ones I put up today. So I just showed you Freeport. Okay. Netflix, I believe I put it as a whole. Ford. Um, let's take a look at that article. All right. So in Ford, this is just moving forward. Ford is a good looking company. Okay. And again, I put up these articles for a reason. And let me show you how it's done. So in here I have a format and it works pretty good for me now. We have to do fundamentals, technicals, and risk. So in there, um, I put in the different data points under the fundamental. And usually the important ones for the year is this right here. So for Ford, it has a 200-day moving average, simple moving average of negative 1%. That's not bad. For a lot of companies, they're really hurting 12%, 20% negative. So this one's pretty well down. But when you look on the 50, it's 8.42. And then really the good one on the 20, which is the last month, it's at 9%. So this is a good looking stock. But here's the thing, you can day trade it and get killed on the commissions, or, well, I shouldn't say day trade it, but if I could work on Ford, um, but right now the stock is fairly affordable. Le- I can't trade this right now. I have to wait 2 days, two working days before I can trade this. Okay. So I'm not going to do it, but I could set it up. So here is, I don't know, 25 bucks or whatever the stock price is. But the point here is, out of all the different types of analysis on stocks, what the more critical one is fundamental. The technical, as I said, is for timing. That's where I'm showing you on the automation on that front. A new one that I've added is AI as well. So I'm using Monte Carlo and regression. Okay, I've done enough of these articles to know which ones are doing well and which ones won't do well. So here you can see on the Monte Carlo, you can see these are the predictive paths, and there's a lot of them pointing up. So Ford has a higher likelihood of moving up. Same on the normalized distribution. Here's the last current price, and there's a lot more on the right side versus on the left side. So most likely Ford should move up. That's the expectation. On the regression, here's the 30-day, that little red regression line is pointing up. The question becomes, what's the probability of that and how long will it last? So you can either day trade it or you can invest it. Now with Exxon, as I've shown you, Exxon was excellent over 2 years where you went 4-time, 5-time return, and even better with Freeport McMoRan. If you invested it, just let it park your money in it, you would have gotten a 700% return. That's why the investing is better. So here on Ford, just as an example, this is where the fundamentals really kick in. You can see that Ford is somewhat challenged. There's no real trend in this stock. Okay, cash ratio and all that, growth. There's some negative going on there for whatever reason. In this case, it's 2019, 2020. I really don't know and I don't care. I'm just saying it's negative. Okay. I don't need to know why. And I don't need to go, oh, well, Ford's going to release this new car, the new Bronco, and awesome. It's going to go up. That's normally not the case. In my case, in my analysis, especially on for Seeking Alpha, it's going to be only based on price. It's not going to be based on news. Ain't going to be based on, sticking my finger in the wind and seeing what happens. the real critical element I look for to know not only on the technical and not only on the AI side, what I look for is the estimates, the forward guidance. Now, again, these are issued by the company. So you can see here yearly estimates takes you up to 2026. Some, if they're very confident, they'll go up to 2027. But here for Ford, this is what I like to see. This is conservative, but it's growth coming out of a fairly flat and negative year in stock returns, or just stock generally in return. So their revenue is very conservative. And here you can see on the dividend, it's okay, but they're expecting a 4% dividend. That realty income, I believe, was at 7%. People go crazy for that. So here it's doing okay on the stock price. EPS is looking pretty good. Okay. EPT, EBITDA, it's okay. The stock, the net profits okay, but it's not great. So that will impact price. So price will go up. But the question is how long for? So you could say that this is an okay company moving forward. Now, if you're going to put your money into something, do you want to put your money into an okay company? No, you don't. So again, one way you can look at it is the recommendation from other analysts. And again, I always provide the source. So in this case, is TradingView. You can see here, lots of people are putting a sell on it in the last month, the last week, and then a neutral. I do believe I put this company hold status and put it on a watch list, see what happens. So that's my status for that particular stock. The one that I wrote about, actually, now think about this. You got to be, I got to stop the trading on this one, even though I got to deactivate that for my declaration. As I said, this just went up today, so I can't trade Freeport until 2 days from now, 2 working days from now. So for Freeport, let me just show you this article. This is a good one. This is a very good one. All right, so here I talk about all the same stuff as in Ford, okay, but the current ratio, quick ratio, doesn't excite me. Growth, same thing here. Data. Now, this is what's important for this year. If you remember Ford, right here, where's SMA? This is important to know. Okay, that's why I put this here, but I'm putting you what the priorities are. So if you have access to these articles, refer to them. Do I have these? Where's my data? Right here. So you can see here SMA 20, SMA 50, SMA 200 negative. Now, when you look at Freeport, same data. Look at it. It's been positive for the last 200 working days on the SMA, simple moving average. That's pretty good. That's really strong. Look at the 50, 25% return. Uh, okay, in the last 50 working days. That's really good. And then when you look at the last 20 days or month, you'd be up 18% on that stock. So again, why would you put money into Ford when it's already got that momentum, right? So the other thing you want to look at, as I said, was the estimates. So again, these are the fundamentals. You're not going to get this with Forex. You ain't going to get this with crypto. You ain't going to get this with commodities. You're only going to get these with stocks because this data is issued by the company. So here, looking at this information right here, look at the growth of revenue on Freeport. Remember, this is a mining company. It's gone up 10%. Not exciting. Dividend, not really. Net profit is up. So this is another good company. So right now, it's an excellent company. I've proven it. It's gone up 7 times in the last 2 years. Uh, last 2 years. Yeah, it's good. Um, see if this will load up in a quick and efficient way. But it went up. So this is a very good stock to be in. It's a very good investment if you know about it, right? So I'm just showing you what I'm looking for. So I've already shown you the Monte Carlo. Look at that expectation in price. It's going to go up like crazy. I think it was $10, and it's gone up $50. Now it's at 37, and it's on another rally. So this could move up quite a bit. I ain't saying it will or won't, but based upon the momentum, it should what I'm showing you. But this is very encouraging on the Monte Carlo. See that amount of for the predicted paths are just pretty crazy. So then when you look at the other one for this, a couple of other areas you can look to confirm is the activity from insider activity from executives. Look at the size, the shares they're holding and they're buying. Look at this, 31,000 buy back in August. So they know there's going to be a major run up, and you're not going to get the data elsewhere outside of my own reports, consolidated reports like this. So that's another big factor. And people go, why would you include this? Well, when they're buying 31,000 stock, there's a reason they're doing it because they know. Is it insider activity? Maybe. But you know that because it's publicly declared by law. And if they're buying that amount and that's what they're expecting, that's a pretty strong argument to dive into the stock. All right. And then when you look at the recommendations again, 1 month, 1 week, 1 day, everybody's all recommending Freeport. Okay. The other thing I wanted to highlight here is I get these, I don't know what you call them, fuddy duddies. I mean, why? How dare you say you lefty? You 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 have to rate the ESG and performance. But what people don't understand, the only companies getting these high ratings, outperformance, are the dirty oil and the mining companies. They're the only ones getting them, not the lefty companies. They're either average at best or underperforming. So have the argument all you want. These are the clean producers right now, outperformers. And again, all this comes from Yahoo Finance. So you could confirm these ratings with these companies on Yahoo. Okay, so again, these are the metrics to know if these stocks are going to move. Now, when it comes to technicals, I'm putting so much information on this video. It's crazy. I had a guy ask me, when do I go in? I don't know. It's not based upon price. It's based upon what's happening in the charts. There's a couple of things you can look for. And this one, I don't have it, but the other way to do it is right here. You can use your MACD, and specifically in this chart, you see right here, this is what I call the zero line on the MACD. Once that price and this MACD line with these parameters breaks through that line, that's your entry. Okay, let me show you maybe another stock for the entry. All right, so where is the entry here? Yeah, right here. A couple of other ways you can do it is if you have a Fibonacci trend line, right? Um, right here, and that price breaks through that Fibonacci trend line, that's your entry. Okay, because you have the momentum there that should carry it through based upon all the other analysis. If it's fundamental, based on other technical charts, as well as the AI and all that fun stuff, the insider activity and other recommendations, right? So that's how you know. Okay, so that's a classic way to know if you have an entry or not, or do an entry. And when the exit is, well, we've already talked about that in the automation here, right? So there is that, right? So let me just show you one more stock. This is just from today. This is another awesome stock. Boom. Okay, Boeing. Who think they have bad news? Guess what? They're turning it around. It's pretty impressive. Let's go to that one. That's BA. Yeah, Boeing Company. So it's down today. Don't cry a river, but it's positive here 1 month. right there. So it's gone from 133 back in October to 173 in a month. That's a big move. Okay. So you're on the tail end of it, but the question is, will it continue to move up? Question is, well, you could look at the Seeking Alpha articles, or you can use the same technique I'm showing you here. As you can see, it's struggled just like Ford, right? But here's what you're looking for: the SMA 200, 10.22%. When everything else is falling apart, that's pretty good. The SMA 50, 22%, and the 20, 17%. That's your get go right there if you got a good stock or not, just based on that. And then you can start looking at the estimate for the next 4 years. Okay. So here we've got revenue, yeah, 66 billion this year, and they're estimating at 107. Hmm. Should I hold that long term? Yeah, you could double your money. And again, this is guidance issued by Boeing. Companies that feel good about their balance sheet and net income statement, they ain't gonna put this information out there unless they know they got a really good pipeline and a really, really strong stock and momentum behind it. So does Boeing feel pretty good about it? Yeah. And if they're wrong about it, their stock does get punished pretty badly. So you can see here revenue's done almost double. Okay. If you look at some of the big tech companies and Tesla especially, that one's number one. That is number one right now. It's Tesla. All right. And look at the dividend as well. That's somewhat starting to strengthen, especially for 23 to 25. That's pretty good. Okay. If the dividend's what you're after, but I wouldn't worry about that. You're probably going to get better performance on the stock, right? So again, as I said, when's the entry? Well, here's your Fibonacci trend line. Look at what happens. This is a negative declining trend line on the Fibonacci. So any point that that price breaks through is your entry. So you could see here, it went up. And look at on the second go around. It's not going up only, it's going to move up for a while. And again, you're going to go, well, I can't trade it. I don't have the time. Well, let the automation take care of it, as you can see, as I've shown you here, and just keep your chart open with a platform like MotoWave and keep your strategy running all the time. And just let the thing trade when it sees a good trade, because most likely Boeing will be a good stock to have. No brainer, right? So again, continuing along on the MACD, look what happens right there. Breaks through. That's your entry right there to answer the question. Now the question is here on the RSI is another a very, very good metric on the technicals. Now again, technicals you don't use forecast or predict. You're using technical analysis to help time the orders. So in this case, if you're just a human trader, you can see here between the 30 and the 70, and look what happens. You have an entry here, and look what goes on. Right there, as soon as it hits 70, you can expect the pullback. And guess what happened? There's the pullback. It's it's not a brainer. So in this go around on the last entry, see what happens? It breaks through that 80, and at some point it's going to pull back. So knowing that, you could kind of write it out, but you got to compare it to other periods of this, other events of this. You can see here, doesn't last very long on the 80, and it pulls back. So again, if you know about this stuff and you can have the automation do it for you in an optimal way, if that RSI is going to hit 70, 80, get out of the trade. Because probability says yes, you will, uh, it will pull back. So if you know that, just write it up and get out once you hit that 70 or the overbought on the RSI. Simple as that. But you can all use all these other methodologies to gauge entry and properly time it using technicals, right? So again, let's talk about ESG and sustainability. I don't post this stuff just because I'm some tree hugger. I post this stuff because let's get real. Pension funds are the largest investors in these kind of companies, and they're activists. So they're going to look for these kind of companies that offer sustainability. And once again, the big bad polluter, Boeing, has an outperformance, people can invest, right? So, you know, it's an again no brainer. This stock's going to do very well. Okay. Now, uh, let's look at uh, let's look at one last article. The woke company known as Netflix. Okay, Netflix. I think it's past its prime. Uh, just as an example, you look at the current these ratios. Again, fundamentals help you. In the past, they've been up and down, and same with the revenue growth. Actually, it's declining, profit declining, and sometimes doesn't have the impact on the stock price. But this is what you're looking for the year. Okay. So again, Boeing, let's do a comparison here. 10%, Netflix, 13%, 20, right? So the 20 for Netflix is 9%. And look at the 20, seven is double. So Boeing is the better stock to put into because it's got the momentum behind it, right? Whereas that's half of what Boeing is. Okay, just as an example. So again, as I said, the stock price, even though it's not making money, even though it's not doesn't have good revenue, look at the stock price. It's gone up about 50% over the last 5 years. Pretty impressive. Let me have my cold coffee here. Oh, okay. Again, the real important juicy stuff is this revenue. Here's the problem with Netflix. Blank for 2022 on revenue all the way up to 2024. Same with the EPS and all these other critical um, numbers. But they'll give you the PE ratio and they'll give you net profit adjusted. Whereas we've got Freeport giving it, Boeing's offering it, Ford's offering it, but not Netflix. So what's going on here? Red flags. Netflix doesn't feel good about their future. So they're giving you the bare bones of it. And as a result, I put that as a as a whole. Maybe an okay company with what I just showed you on the SMA. Now, this is I would consider a lefty kind of company, and I'm only showing you this here because I think this is important to distinguish. Look at sustainability, underperforming. Okay, highest controversy. Okay, so if it's underperforming, you go, well, they're just an online. Yeah, but they're running servers and they're taking up, they're consuming hydro and or electricity and blah 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 blah, and they ain't gonna do anything about it. So they're underperforming where Boeing and mining companies and big polluter, big bad companies are outperforming. So um, going into a recession, I think that could be a problem for companies like this if they can't get their sustainability up to what the big bad companies are, like the miners, oil producers, Boeing is another example. Um, yeah. So this is how you're able to look for stocks that do well. I've already talked about timing it. I've given you the lazy way to do it by automating it. I'm also giving you the actual strategy as well. What more do you want? What more do you want? So I've given you in real time some very good, very good um, companies. I've given you lots of, and we haven't covered crypto yet, but this is important. Okay, this is important. So if you want to know more, okay, you want to know more, and you're all new, just come to quantlabs.net/books. You'll be put onto my email list. And I've got my store here, quantlabs.shop. I haven't set my purchase button yet, but the quantlabs.shop has all my product on there, including this as well. If you go under catalog, and you'll have everything here. I'm giving everything for $9.97 for a year. So if you want to learn about the trading bots I've got, if you want to know this plus the source code plus the archive, so on and so forth. Uh, I got a 2 year archive of all my webinars. I think it's now coming up to 3 years. It's pretty good deal, and nobody can match this. And I'm hoping soon to have this verified as well. So I'm pretty excited where this is going, but it will be expensive. And if you can't do it, then go over to Seeking Alpha because that'll probably be my next best place to go. All right, so I'm gonna leave it there. I've been blabbing a lot in this video. Didn't expect it to be this long. I've given a lot of gems and all kinds of stuff. So it's on you. If you end up in the soup kitchen line next year, uh, it's all on you. If you want to do well, it's going to get challenging. I've shown you that real estate's not the place. Well, I shouldn't say it isn't, but there's way better places to be to build wealth and retain wealth, preserve wealth, um, and do it in a more manageable way, in a safe way, and a more legit way. I mean, as I said, with crypto, I love, um, and so on. So yeah, quantlabs.net/books right there. I'll put it in the description. I'm gonna shut up now. I've done enough blabbing, but thanks for watching, and hopefully we'll see you, as I say and they say, on the other side.